here. Okay. So, first thing first, we are going to do a reflection in terms of all that we have learned all these past weeks. So, the first week we learned about the introductions to financial and whatsoever. And then the second week we start with business organizations, right? So the first thing that we learn in business organization is an organization type. Remember the form of organizations. So there are 3 types of organizations. Yeah. Business organization. Business organization. Okay, so there are 3 types. What is the first type?
Sole proprietorship.
Sole
Proprietorship.
Proprietorships. What does sole proprietorship means?
Single partnership.
Single one. Only single person. Meaning that the owner of the company or the owner of the organization or the owner of the so-called firms is one person. And he have or she have a lot of workers or employers, but the owner is only one. The second one we have
Partnership.
partnership. That is correct. Okay, partnership can be divided into
Two or more persons. Associated.
2 or more person. That is correct. Okay, so when we talk about 2 or more person of partnerships, there are 2 types of partnerships, which are
General and limited.
Limited and
general and
Limited.
limited. So what is the difference between general and limited partnership?
in profit and liability.
Profits and liability. Okay, what does the difference between general?
Liability is not limited.
Liabilities is not limited. And limited?
Liability limited to amount this.
Okay, that is correct. Okay, what in general partnership, what happened is if one of the partner die or don't want to become a partner anymore.
In general, should to be dissolved.
We need to dissolve. However, in limited, we don't need it to be dissolved.
Yes.
Okay, all right. So that is partnerships. And then the third one we have
Company.
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 So company means that the owner can be getting due to their shares. Okay, so a lot of people buy shares and they can become the owner of the companies. Okay, all these shareholders is becoming the owner. And in any company, the purpose of any company is to increase the wealth of the owner. However, increasing the wealth of the owner might be a little bit too biased because the one who are going to do the works is actually their workers or their managers. Right? And they'll be very jealous. Why do I need to do all of this? Why do I have to increase the wealth of my owner? So, this issue is called
Theory.
Theory. What theory?
Agency, theory agency.
Agency theory.
Agencies.
Okay. So what does agency theory say? Agency theory says that in order to increase the wealth, the workers and managers need to help. Okay. However, some of the workers or some of the managers might not feel this is not their purpose in life. Why do they need to do this? In order to solve the agency theory, we have two types of method to dissolve it or to solve it. The first one is by threat, and the second one is by rewards.
Reward.
So threat means that we take an hostile takeoff, or we threaten it to fire, and etc. Maybe not giving any holidays, or not giving any holidays, to hold your holidays. That actually happens to my partner organization. So his staff was not performing well for the last 2 months. So what happens? The top managers feels that she did not, the person, she did not deserve any Raya holiday. Okay, so her holiday has been whole. However, my partner is the one who have to tell the workers about this, and he is feeling very bad about it, about not giving holidays kind of thing because of performance thing. So that is what we call threat. Okay. However, in terms of reward, we can give bonus, right? And we can give stock option, stock or share option. They also can become a bit of tiny bits of bonus. Okay. And then after agency theory, we also learned about financial institution. I'm sorry about the, I'll try to make it sengit kind of thing. Shit. Because I'm a left-handed, so my writing is a little bit of leftist. So I try to write a bit not to the left. Okay. Are we? All right. Okay. So financial institutions, you learn about how can we get from surplus, the one who have the money, to the one who doesn't have the money. It's a business. Oh my, today my drawing even is a bad one. So this is deficit. Surplus have a lot of money, deficit don't have the money. Surplus don't have an investment option, deficit have investment option. So in order for it, or in order to make sure that both of them can get what they want, surplus want to increase the money, deficit needs money to do their investment, and in the end increase their money as well. So we need to transfer the money from surplus to deficit, and then deficit, when they have the money, can transfer back the investment to surplus. However, sometimes surplus don't know who is the deficit organization. Hence the reason why in here, it is here we have in the intermediaries. The financial banks or the agents that you can contact in order for you to find the best investment in order to put your money safely to increase your profit and a lot of other more. Okay. I actually also, no, not me lah per se, but a few of my friends, 2 or 3 of my friends is actually working as a wealth what's the word? Wealth provider, wealth organizer, can't remember. Wealth planner.
Financial planner?
Financial planner is one thing, but they are called, I don't know why, but they're called wealth planner nowadays.
Fancy name.
I guess maybe because they are saying about, they are more about investment of whatsoever. So they help you, if you have money, they help you to invest and they help you to find where can you get your taxes and everything. So this is what we consider as intermediaries. Okay, so that is in our second week. In our third week, what did we learn?
Balance sheet.
Balance.
We learn about financial
Financial statement.
statement. And financial statement can be divided into 4. However, we only look at 3 of it. So the first one is
The
Income
Income
statement.
statement.
income. The second one is
Balance sheet.
Yes.
balance sheets. And finally,
Cash flow
Flow.
statement.
cash flow. Just so you know, my last semester student was all about calculation. Okay, they were obsessing with calculation, everything. Every day also before the final exam, they will nag me and ask me about which calculation will come out and everything. I did not tell them actually what I do tell them the topics. However, I did not say whether this is a calculations or theoretical. And the thing what happened was I put a lot of theoretical last semester. So they were kind of surprised because they need to understand, not to copy and paste, because you need to understand first what is the financial statements and everything. Then only they can answer the question. So do not, please be prepared for theoretical and also calculation parts for your final exam. Because I really think that it's not only the way you are going to calculate it, but you also need to understand the principle of it. Okay, so in income statement, what is the formula for income statement?
Sales minus
Sales
expenses
Equal
Sales
to profit.
minus
less with
expenses
expenses
will equal profit.
equal to profit.
Profit.
All right, okay. In balance sheets, it is
It is liable
Total assets
total
total
asset
assets, yeah,
equal to current liabilities minus current
equals to total
liabilities.
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 Minus.
Why minus?
No.
Let's
Plus,
say
plus.
The equities.
Plus, yes.
Plus
Total equity.
and cash flow is
cash flow, it's net Net
Operating
operating,
Operating.
investing, and financing. Yes.
Operating
expenses.
Plus
is it
investing,
expenses?
Plus investing.
Investing
plus financing.
plus financing
Will give us the net
plus
plus balance from,
initial balance
yes,
equals to cash
increase
and cash.
equivalent.
Money. Okay, so that is financial statement. Okay, and then we learn about financial ratio. So there are 5 types of financial ratio. However, why do we need to do financial ratio? Is because we want to do comparison. Okay,
Yes.
so the comparison can be in 2 types. The first one is
Internal,
Here, no?
Internal.
comparison, internal comparison. Which means that we
Wait,
have
mhm.
the ratio and then the year. Year 1, year 2, year 3. And then we have
the external,
Izzati, what do we have? Ratio.
external,
Izzati? Izzati, are you there? Izzati? Izzati? Oh, Izzati. Azrul, what is the other comparison?
External or industry average.
Yes. External comparison. In external comparison, we do have also the ratio. Maybe it is in year. However, you will have 2 types of line. So the first one is your company. And the second one is the industry average.
average.
Okay, so that is ratio. There are 5 types of ratio. The first one is Ganesan,
Liquidity.
liquidity. Right? Najiha, the second one is
Asset management.
debt management. Sazad, what is the third one? Sazad, are you there? Sazad,
Yes, doctor.
what is the
My
third ratio?
current asset management. Depth ratio.
Debt management. This is a category, not the ratio itself. All right, thank you. Salim, what is the other one?
Yes. Actually, investing.
Can you check, Salim? What is the fourth one? It is starting with the word P.
I have checked, but I didn't find it. Maybe,
You cannot find it. How come you cannot find it?
maybe,
Salim,
yes,
what is the fourth?
I have checked. I have checked.
You are currently checking it.
Uh,
I have checking means that you already done it or you are currently doing it.
Profitability, prof,
Huh? Sorry?
prof, profitability.
Profitability.
And market value.
And finally, Diana, what is the final ratio? Anyone else? Nasir, what is the final ratio?
Market value ratio.
Market. That is week number 3 and week number 4. All right,
Oh.
okay. In week number 5, which are last week, what we did is actually we learned about
Forecasting.
Visual forecast.
forecasting. And in forecasting, we look at the future by estimating what can we get or what do we, how do we plan in order for our financial budget for the next year or for the next 5 years. Usually it's for next year only. Okay, so the things that most important in forecasting is the pro forma form.
Yes.
Okay, and in order to do this pro forma form, there are 2 types of way of doing it. The first one is using the percentage of sale method.
Yes.
And the second one is the additional fund needed, AFN. So what we learned a lot last week was percentage of sale method. So we take the sales as something that we can anticipate. This is the things that we anticipate. And we, okay, all right. So sales can come into the relationship of sales can come into 3 parts of it, which first is directly, indirect. And I believe that one way is not applicable. Okay, we're just going to put it's not applicable. So what are the the components in balance sheets that is directly affected by sales?
Assets. Assets and
What type of asset?
current
current asset.
and fixed.
What type of current assets there can be? Give me an example of it.
Like inventory and
Current
Uh,
assets.
Taxes.
What type of current
Right.
asset?
like cash and
Account receivable.
Account
inventories,
receivable.
account receivable, yes.
Okay. So what else?
Fixed asset.
Yes. Yes.
Inventories. Is inventories directly affected by sales?
Yes.
Yeah, they are assets, right?
What else?
Um,
Account.
what is-
Cash.
cash,
Cash. What else?
and
Account.
I
Account payables. This
Account
one is
payable,
actually
yes.
in
liabilities. I think.
liabilities already. Right. Okay. Is there anything else that can put here? This is just example, okay, guys. This is not meaning that, but this is among the things that you can find, that you can check. Oh, this one is directly affected, meaning that any increases on sales, we're going to check the percentage of
Accrued.
it,
Accrued
then we're going
expenses.
to multiply with the percentage. Sorry?
This is accrued expenses. Also part of directly.
Okay, any other examples? No. Indirectly is the
Retained earning.
Retained earning.
in earning.
Common stock.
Stock is not exactly in here because retained earning is what, let's say it is for 2020, right? So retained earning for 2020 plus with any percentage of,
Left
sorry,
is
Additional change.
the additional change for the retained earning in
net income.
Net sales.
2021. Here, the percentage will be given for you. Okay, how many will be retained and how many will be in a way, yeah, Ganesan is actually correct, which means that how many are we going to provide for common shares and whatsoever. I believe that is applicable as well. Yeah. So in retained earnings given for you, half of it, let's say 50%, will be given to the shareholders. For example, this is based on the profit.
Do we call that dividend?
Mm,
50% to shareholder.
yes, we can.
Okay.
All right, and maybe 50% we're going to retain
Okay.
it. So this is the 50% that's going inside here to become the retained earning for 2021. Then we plus with retained earning 2020, then it becomes the new retained earning. Okay. So non-applicable. For example,
Long-term liabilities.
Well,
long-term
Debt. Note payable.
No spendable.
Oops.
Common stock.
Common stock is here sayang. Indirectly.
No, common stock is not.
But that's a good guess. But we this one common stock is under shareholders. It's a good guess, though. All right.
But-
Okay. So this is what actually you learned last time.
But
Whether which one is
teacher.
directly, indirectly, or non-applicable.
Doctor, in the slides, and it's mentioned this is also common stock and paid in capital is part of non-applicable.
Ah, so you just use this one. Don't use that one. Okay. Now, what I want you to show to you is for last week. Okay. See, common stock, no change. So this is what you've been doing, the example that you've done last week. Remember that the questions was Zigen sales were 10 million and the firm was able to earn net incomes equals to 50,000 in 2028. So this is the profit of 20,000. So we put it here, 50,000. So Zigen Financial Analysts also estimate that the firms will earn 5% of the projected 12 millions in sale forecast for 2019. So 12 millions in 2019.
Yes.
Okay, so this is it. And for sales in 2018, 10 million. So this is it. So 5% of the projected 12 millions times 5%, you get 600,000. Okay.
Mhm.
Now, we'll check as well. They can be checked whether the net income is 600,000 or not. We'll check it from the sales and net income. So 500,000, 0.5 millions divided by 10 millions, you will get the percentage of sales is 5%. So you put it here, back the 5% of it, which is actually similar to the analyst firms punya analisa or forecast. So 12 millions multiplied with 5%, you got 600,000 as well. So you can actually check it. Okay, done with the income statement. Now we are going to the balance sheets. Now, the balance sheet is the first thing that we see. You have to look at this one first. Okay, so current asset or whatever inside current assets, so let's say notes, payable, receivable, sorry, notes, receivable. Okay, sometimes I got confused about that as well. Oh, sorry. So you've got 2 million. Also, in order for you to find it in sales, percentage of sales, so you have to ratio it back to the sales. So 2 millions divided by 10 millions, your percentage is 20%. Okay, now you carry the 20% to the 2019. So 20% calculate with the 2019 12 million. So 20% of 12 million, you got 2,400,000. So far, anyone have questions with this?
So far, so good.
Izati, do you have any question?
No, doctor.
All right, okay. Now,
Yeah.
Najiha, are you okay with this?
Yes, doctor. Okay.
Okay. Now, for
One-
next week,
One question, teacher. Do we have to follow this chart or the table when we answer the question?
No, you can use any types of way if you want to do it. This is just because it's much more easier for me to
Oh.
read and to give marks to you. So
Okay.
if you are using another way of doing it, I have to find marks, and sometimes I might miss it. So
Okay.
if I missed it, then you won't get marks.
I see.
But there's no right way or wrong way. That is it's up to you. It's just that this is much more easier for me to read and much more easier for you to understand and much more easier for me to take it later on. That's it. Okay, so next week's assets is 4,000. So then we'll calculate 4,000 out of 10, so 4,000 lah. 4 million out of 10 millions, you got 40%. Bring the 40% to here, multiply it with 12 million in order to get your next pro forma, which is 4,800,000. So now you can calculate the total asset, which are 2.4 plus with 4.8. So you get 7.2 million. Okay, because all of this will be given lah. Maybe I will not give you the total asset because you can calculate it what? 2 plus 4 is equal to 6. Okay, now we'll calculate the account payables. This is 1 million. 1 million out of 10 millions, you got 10%. Bring it to the 2019. 10% of 12 million is 1,200,000. Same with accrued payment. This is 10 million, 12 millions. So here is also 1 million. 1 million over 10 million is 10%. Accrued payments, you multiply it, then you got 1.2 million. There is non-applicable for note payables. It's not applicable, so no change. So you're just going to put it back 500,000 here. Now you have to calculate the total current liabilities. Total current liabilities is account payable plus with accrued payment plus with note payable. So 1,000 plus 1,000 is 1 million plus 1 million is 2 million plus with 5 is 2.5 millions. So in here is 1.2 plus 1.2 plus 0.5, which are 2.9 million. So until here you will get marks for total current liabilities. Next, for long-term debt, this is non-applicable. So no change, you're just going to take the 2 millions here. And then in order to calculate the total liabilities is 2.9 here times with 2 millions.
Yes.
So you get 4.9
million.
Until now, any question?
No.
Okay. So now, common stock. So common stock not applicable, meaning that there is no change. Not directly here. Okay. Because in here means that is going to be earning and renewables. I know it looks a little bit complex or complicated to you. For parts of it, just follow the calculations part of it. I don't want to explain it too much because it will just make you feel headaches. But you can read about it. Why the common stock here got no change. However, the up one is saying that some of it we're going to pay it or something will pay it. Not going to touch it too much, or else we're not going to finish the class on time at all. Or I need to send you to my master of financial in order to understand it more. So we're not going to go there. Just remember that for these parts of it, this part of it, it will have no change for common stock. So here, the common stock, no change. So meaning that you're just going to drag the 100,000 to common stock here. Okay. And paid in capitals also, there's no change, so non-applicable. So you're just going to drag the 200,000 here. So in order to calculate your retained earnings, you have to get the previous retained earning, which are 1.2, and then get back to the plans to retain 50% of its earning. So 50% of its earnings, which are the net income, so 0.5 out of 600,000. So this one is going here. So 1.2 plus with 50% of 0.6, you got 1,500,000. So now you can calculate the equity, which are from common stock plus with paid in capital plus with retained earnings. So you got 1.8 million. Now, in order for you to calculate the projected sources of financing, this is actually just your total liabilities plus with equities before you add any discretionary financing need. So in here, you just have to add from total liabilities, which are 4.9 plus with 1.8. So that is your projected source of financing, 6.7. However, when we check 6.7 with our total asset, which are 7.2, we cannot make it balance. Hence, in order to calculate the discretionary financing needs, 7.2 from here divided with the 6.7, which are the projected source of financing. So 7.2 minus with 6.7, you get 500,000. So what is your total financing needs? It's actually
500,000
6.7 million
minus
plus with 0.5 million. So you got 7.2 million. So this 7.2 total financing need is the one that is same with your total asset. Yes, Ganesan.
For this calculation, what I did for total financing need is I simply took the discretionary financing need, 500,000, and just minus with net income. So is net income plays any part on this financing need? You already found out 600,000 net income or not?
I cannot see this. So meaning that you're using the 600,000 plus with 500,000. Because the idea is to make sure that your balance
Basically, I'm just
sheets
minusing 600 with.
from
Mhm.
your minus 600,000 from
This
Ganesan, I
minus
cannot.
500,000. So my understanding, my understanding about total financing need is how much finance that you need for the next year. So my understanding is that, okay, since you have a net income 100,000 project net income, your financing need only 500,000. So basically you are okay. Like you have like surplus of 100,000.
No,
So
but
that's
the
my answer actually.
600,000 is being divided twice because one of it they are going to pay the shareholders. They won't have 600,000. They might won't have only 300,000. Right, Ganesan?
So sorry, I had to switch from my phone to laptop. I lost the voice.
The link of it.
Mm.
Yeah, because here remember that 5% of his earning. So 0.5 of 600,000. Okay, now before we go to our real classes, I'm going to give
Doktor,
you. Yes, sayang.
Doktor saya nak tanya. Boleh doktor ajar pakai AFN punya formula?
AFN boleh tapi bukan hari ni. I'll try to make a video of it later.
Okay.
But Doctor,
Dalam
if
exam kena pakai formula tu ke atau boleh yang simply doktor ajar je?
Kalau soalan tu kata kena guna formula, then you have to use the formula. Kalau tak payah guna formula, then you don't need to use the formula.
but
You can
you
just
should,
take from the discretionary.
but we should
Okay,
get the
kalau
same
nanti
answer, right?
doktor share lah.
Sekejap, Ganesan, wait. Zati, what is it?
Okay, Miss later nanti doktor akan share kan?
Ah.
Okay, thank you doktor.
You're welcome. Okay, Ganesan, what's the question?
Oh, sorry, Zati. No, we should get the same answer, right? If I use AFN, yeah, should.
Yes,
Okay.
you should.
If I want to double check either one, I can make both and compare the answer. Okay.
Yes, that's
And-
supposed to be.
And one more question, like I just put in the chat. Still a bit confused about this difference between spontaneous and discretionary financing. So-
Okay. So spontaneous and discretionary financing means that one of it is spontaneous means that every time, I think. Remember? Let me open it up back. So spontaneous are those that occur naturally during the ordinary course of doing business, and discretionary is those require a special effort for the firms to obtain. So remember that our financing just now is discretionary, right? Because we need to find another way to get that money. Just now. Because we have to add like, how much lagi yang kita kena tambah? We have to add another 500. So
Okay.
we have to find that 500 using the discretionary financing. Meaning that maybe kita kena pinjam bank, we have to ask from loans, maybe we have to issue another type of stocks in order to add it up. However, spontaneous punya financing, this is just some things that happens directly, naturally.
I mean, we no need external financing. Whatever money that you have is sufficient to run for next projected year.
Yes, for spontaneous, yes.
Okay. Thanks. Thank you.
You're welcome. Okay, any questions? No, if no, I'll see you again in 5 minutes time. So take a deep breath and then we come back and we're going to learn about cash budget. I'll see you in 5 minutes. Resume. Okay, so now we are going to look at the cash flow and financial plannings and what is the relationship between it with pro forma that we learned last week. So when we talk about cash flow, remember that even we learn in our third weeks, second weeks. No, third weeks. On cash flow, we have operating flow, we have investment flow, and we have financing account. We have actually account now, operating account, investment account, and financing account. But in here, I'll call it flow because it's flowing. So operating flow is the operating activities which include any sources and use of cash. Okay. When we talk about pro forma just now, previously we talked about investment, we talk about other things that might or might not be cash, but cash flow, anything that have to do with cash and cash only. Okay, use of cash from business activities. It reflects how much cash is generated from a company products or services For example, changes made in cash, account receivable, depreciation, inventories, account payables are reflected in cash from operation. Next, we have investment flow, which are investing activities include any sources and use of cash from a company investment, a purchase or sale of an asset, loan made to suppliers or received from customers, or any payment related to a merger or acquisitions is included in investment flow. Changes in equipment, asset, or investment related to cash from investing. And finally, we have financing flow, which are cash from financing activities, include the source of cash from investors or banks, as well as the use of cash paid to the shareholders. For example, payment of dividend, payment for stock repurchases, and the repayment of debt principals. For example, loans are included in financing flow. So, now, last week, we actually learned about pro forma. This is what we call long-term financial plan, which generally encompass a period of 3 to 5 years, or what actually I just use more than 1 year. Okay, more than 1 year, we're using pro forma. So incorporate estimate of the firm income statement and balance sheets for each year of the planning horizon. In short-term financial plans, it generally encompass period of less than 1 year. It means 1 year, 12 months and less. Okay, it's a very detailed descriptions of firm's anticipated cash flow. Okay, and the formats usually used are cash budget. What we're going to learn today is actually how to do your own cash budget. Okay, you can use it for your company, you can use it for your own. I actually use this thing for my own. Okay, when I was 30 years old, I don't have any what is it called? Debts. I don't have any loans that I have to pay because I guess because I learned from financial, so you guys can learn from here. And now, just by my own, I'm not talking about other people lah. I actually have 3 houses already. I have 3 houses. I just one is in KL, 2 is in JB. I'm planning to rent my 2 houses, and I'm planning to buy 2 more in the future. So one of the reason why I can do all of this is actually I been applying what I learned from financial management in my own life. So I'm not saying that I am the best person in order for you to ask me about investment or anything, but I do believe that for my age to get 3 houses already is quite a accomplishment. So I just want to tell you, so you can use this for your own thing. Okay, all right. So now, why do we need to do financial planning process to help to achieve the firm's objective? What is your objective for your companies and everything? And 2 key aspects of the process, you need cash plannings, which is your cash budgets, and profit plannings, which is your pro forma statement. Okay, so how to do it? Actually, why do we need to learn about pro forma? Is actually you have to start with your long-term strategic, long-term first, which is pro forma. Then only you can do with your short terms, which is operating plans and budgets. Hence the reason why we learn about pro forma first, then only we can learn about cash budget. Okay, so because cash planning is cash budget, profit planning is what we call pro forma statement. Sorry, I was distracted with Amos just now. I don't know. Suddenly we have somebody else inside our class, but he's gone already. But that's it. Okay. All right. Now, there are two things that you need to remember in cash budgets or cash flows. Cash come in and cash come out. So cash come in, money going into a business, okay? Decrease in any asset, increase in any liabilities. Okay, net profit after taxes, depreciation, and other non-cash charges, and even, for example, like sale of stocks. Okay, so it's decrease in your asset, increase in any liabilities. Cash outflow, money leaving your business. Increase in any asset. You have to buy houses, or you have to buy machine. Okay, so cash is increases. Cash increase. No, let me get it. You have to buy, let's say, phone. Phone is considered as your asset. Okay, so increase in asset, however, decrease in your liabilities. And then you have net flows. For example, you paid for your dividends or repurchase or retirements of stocks. So that is cash outflow. Now, I'm going to give you a very simple example. We're going to do it together. So this is an example of a very personal or individual cash budget, because I believe some of you might be a little bit confused what I was talking about just now. So hello everyone, my name is Zafri. Zafri is actually my nephew. I am 10 years old. No, he is actually 5, but just for these purposes, I'm just increasing his age. Every Monday, my mother will give me 50 ringgit. This is my weekly allowance. I will spend 5 ringgit in recess to buy bread on Monday because I love bread. Tuesday is spaghetti day in school. I will spend 15 ringgit to buy spaghetti. It is very expensive, but spaghetti is the best. Wednesday until Friday, I will spend 10 ringgit each day during my recess because I am hungry. Okay. On Saturday, I will help Auntie Nadia to wash dishes. Auntie Nadia loves me the most and usually will bake me cake and give me another additional 10 ringgits on Saturday. On Sunday, I will keep half of my money in piggy banks and use the remaining next week. Can you help me prepare my cash budget for the week? So, first thing that we need to do is to get the dates. Okay, because in any cash budget, the things that important is when and how much. When is the date? How much is the money? So you can check all the pink color is the what we consider when. So Monday, every Monday. So buy bread on Monday, Tuesday, Wednesday, Friday, Saturday, and Sunday. We'll put it inside your cash budget. The RM, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday. So that is the when, date. Okay. Next, we'll check the items that we're going to get, the components of it. So it is in green color. So on Monday is bread, on Tuesday is spaghetti, on Wednesday until Friday is just paying by any lunch for during recess. On Saturday, Auntie Nadia is the one who gives money and usually bake cakes. And then on Sunday, piggy banks and use it for another week. So opening balance, because in any cash budget, you need to put opening balance, whatever you get from last week. So your weekly allowance, bread, spaghetti, any other foods, wash dishes, cakes, and piggy banks, and closing balance for every day. Because you are doing it for daily. This one is for daily. Okay, so you've got all these things from the green color thing. Okay, now after we got the components, we got the dates, how much of it? So we've got 50 ringgits, 5 ringgit, 15, 10, 10, and half of my money. So put it back in here. Opening balance is Monday. We don't know the money. We don't know last week, do he have any money or whatsoever, because there's no information of it. So we start with 0. And then weekly allowance, every week he got, or in here he said, we'll give 50 ringgits. So 50 ringgit. And then for in school, I will spend 5 ringgit in recess to buy bread on Monday. So less with 5 ringgit. Is there any things that he buy in Monday? No. That's all on Monday. So 0 plus with 50 plus with less 5, you got 45. This is your closing balance on Monday. Bring your closing balance to your opening balance in Tuesday. Okay? So far, any questions for Monday?
No.
No. All right. Okay, good. So opening balance 45. Do Zafri got any weekly allowance on Tuesday? No more. Do he buy any bread? No.
No.
But however, he did spend 15 ringgit to buy spaghetti. So put spaghetti in the Tuesday columns. Okay. Other food? No. Did he wash dishes? No. Did he been baked by cakes? No. Did Auntie Nadia give anything? No. Did he put any in piggy banks? Nothing. So 45 less with 15, you got 30 for your closing balance. This is your closing balance for your opening balance as in Wednesday. So 30, other food is 10. So it does say that Wednesday until Friday. So you can put 10, 10, 10. However, the opening balance will be different. So 30 minus with 10 is 20. 20 will go here. Nothing else happens, just other foods. So 20 minus with 10, you got 10. Then 10 go to the Friday. The Friday minus with 10, you got the closing balance as 0. So on Saturday, Zafri actually doesn't have any money. However, her very, very cool, very cute auntie give her another 10 ringgit. So now 0 plus with 10, you got closing balance as 10 ringgit. So the opening balance on Sunday, he got 10 ringgit. And he did mention on Sunday, I will keep half of my money in piggy banks. So 50% of from 10 ringgit is 5 ringgit. So the closing balance is 5 ringgit. Any question?
So far, so good.
All right, okay, that's good. Anyone, and other people okay?
Yes.
Right, good. So if you are good, so this is Zafri, and Zafri say, thank you. This is actually his age now. All right, now, so again, the summary from what we learned just now, record the cash inflow and outflow of the business. So cash inflow less with cash outflow equals to the net cash flow for the periods. So 2 questions need to be considered is cash. If it's not cash, don't put it. Sometimes I'm just going to trick you, or sometimes in real life it's going to be credit. Let's say you have a company, and then your company are going to pay you 50 ringgit. However, it said that 50 ringgit, 20 ringgit will be in credit. So meaning that the cash is only 30 ringgit. Okay, remember that credits doesn't mean that it is cash. You can only use cash. So does the item of information involve cash transactions, and when? Only that date only you're going to put is as cash. The rest of it you're not going to put it as cash. Any questions so far? No. All right. Okay,
No,
good. Okay, so the preparations of cash budget usually involve the following stage. The first one is that forecast of anticipated cash inflow. What is that you think, or what in your what cash inflow that happens? Where do you get the money? Okay, cash and credit sales. Second is in terms of how much the cash will go up. Okay, how much payment for trade purchase, raw material purchase, any credit basic timing of each payment should be aligned with agreed credit terms. And third one is to determine the net cash flow. Cash inflow minus with your cash outflow. And then you will get financing to cover if there are shortage. Do you need to borrow money if when your net cash flow is negative? Okay, so you need to determine it. And finally, forecast the anticipated cash out. This is actually the same. No, I until 4 only. Sorry. So until here only to cover the cash shortage. Yeah. Let me get this out of the way first, or else I'm going to forget. I've been meaning to delete it, but I kept forgetting about it. Right. Okay, this is good. Okay. Now we're going to do another example together. So Polyclinic Berjaya is a medium-sized clinic which provides a general medical services, is preparing cash budget for the first 2 quarters. 2 quarters of 2018 meaning how many months?
It means 8 months.
1 quarter is how many months?
6
6 months.
6 months. Yes. In order to prepare the cash budget, the financial officer of the business has collected the following informations. You are required to help the financial officer prepare cash budget for each of the first 2 quarters of 2018. If we say this one, means that you're going to have 2 things only. You don't need to do it monthly. Sometimes I'm going to ask you to require to do it monthly. Then you have to consider monthly. But this one is only 2 quarters, meaning that 1-2, 1st quarter and 2nd quarter only. Alright, so this is what you have. This is the information that the financial officer of the business have collected. So you have opening cash balance, which are 50,000. Payment of income tax, this happens in 2nd quarter. Okay, not going to happen in 1st quarter, it is 2nd quarter. So payment of income taxes, it is cash inflow or cash outflow?
It is cash outflow.
It is
Outflow.
cash outflow.
Yes.
So this is opening.
Jom Mami mandi kat Rana. Mandi kat bilik air luar ni bagi Mami nampak. Jom buka baju sayang. Kita nak pergi jalan ni, nak pergi shopping mall lah. Mami cik baju raya Rana.
Baju raya Rana?
Nak beli dah.
Mami tapi bila ni nak? Ya Mami belikan api juga. Mami jangan bawa kan nak pergi kat malam.
Okay, not so sure who is that. Yes, you can go take bath, but can you wait until mute it a little bit? Alright, okay.
Ayah, sorry.
It's okay, it's okay. Okay, so payment of income tax in 2nd quarter is actually cash
Outflow.
flow. So this is actually, oops, this is cash outflow, CO. Okay, and this happened in 2nd quarter. Okay, then you get physician salary. Physician salary meaning the doctor salaries lah. So this is inflow or outflow?
Outflow.
This is outflow. That happens in the 1st quarter, and this one happens in 2nd quarter. Okay. Interest from investment. This is outflow or inflow, guys?
Inflow.
Outflow.
Inflow.
So this is inflow, meaning that you got money from your investment that happened in 2nd quarter. So overhead cost that you have to pay for people the 1st quarter is cash
Outflow.
outflow, which is 2nd, And second quarter is second outflow, which is 2. Okay. Now, selling and administration costs, including 4,000 depreciation. So, meaning here, you need to include all of this minus with 4,000.
4,000.
Okay. So, in first quarter, so meaning that your selling and administrating costs, this is your
Cash
cost
inflow. It's inflow.
outflow. This
Outflow.
is first quarter.
Yes.
Second quarter is good outflow as well because you are cost. This is cost. Second quarter. Purchase of equipment in second quarter. This is outflow or inflow?
Outflow.
Outflow.
Outflow. Okay, this is in second quarter. Sale of equipment.
This is inflow.
Inflow.
Inflow in first quarters. So cash collection from clients. This is outflow, inflow.
Inflow. Inflow.
Inflow in first quarter, and second quarter
Outflow.
inflow.
Yes.
Second quarter. Interest payment for second quarter. This means if you are going to borrow money.
So this
Yes.
is outflow.
It is inflow.
Outflow.
So
Outflow.
borrow
Interest.
money. So you have to put interest payment. Because why? There is another information here said the company has to maintain a minimum cash balance of 300,000. If it's less than 300,000, they need to borrow money. If they need to borrow money, then you have to get get money from let's say loan or whatsoever from bank or whatsoever. Then this will become interest payment of cash outflow. Okay. So first quarter opening, we're going to put it in a very systematic manner. So the first one is the opening balance, followed by when any inflow, CI. Then we're going to calculate the total of it. Then we're going to put cash outflow.
Yes.
And then you got the net cash flow. When you get net cash flow, you're going to put any financing that you required, any additional financing. Here, you can see that the opening cash balance is 50,000. Remember, the opening cash balance is 50,000. So 50,000. So first of all, we'll put cash inflow. This is add. So collection from clients. From here, cash collection from clients. Cash only. If it say credit, you cannot put it here. Okay. No credits can be put in cash budget. So cash collection from clients, 250K. 250,000 ringgit. Okay. And then sales equipment, 20,000. And other interest from investment, no, that one happens in second quarter. So 25,000 plus with 20,000 plus with 50,000, you got 270. Oh, sorry, 25 plus 20, you got 270. Plus with the opening cash balance, 500,000, you got 320. Okay, you're going down. Don't go to the next one of it. Go down first. Finish what you have done first. Okay, the first quarter of it. And then we're going to less it or minus it with cash outflow. The physician salaries, which are 200,000, with overhead cost is 60,000, and selling and administrating cost is 46,000. Here you can see that the first quarter is 50. However, the cost need to minus with depreciation. So depreciation is 4K. So hence the reason 50,000 minus with 4K. Because depreciation is a non-cash item. And you cannot put it inside cash budget. So it becomes 46. Any income purchase of equipment? No. Any income taxes that you have to pay? No. So 200 plus with 60 plus with 46, then you got 306. Now, in order to calculate cash, net cash flow, 320 minus with 306, you got 14,000. However, remember the company has to maintain a minimum cash balance of 30,000. So 30,000 means that they have to borrow another 16,000. This is borrowing. Okay, no need to financing, no need repayment yet. So now 14,000 plus with 16, you get your 30,000 because must have 30,000. So this 30,000 goes to the second quarter. Then you add it up back, all of it. Then you got your total available cash. And then you add up with all your cash outflow. Then you got your total cash outflow. Then you minus with your to get your net cash flow, which CI minus with CO. So 537 minus with 5456, you get 81,000. However, remember that last quarter you borrowed money 16,000. So you need to pay it back. And then because you borrow money, you have to pay for the interest. So the interest you have to add in your borrowing. So 16 plus 1,000, it becomes 17,000. So 81,000 minus with 17,000, you still get 64. 64, does it have enough cash balance? Yes, 30,000. So you don't need to do anything. Enough until here, you can stop. Any questions so far?
No.
All right, good.
Point.
If got no questions, this is some of the summary. The cash must be prepared in sequence. Go down because the ending cash balance of one period become the beginning cash balance for the next periods. So that's the reason why we start with first quarter cash budget, then only continue with second quarter cash budget. Because the closing cash balance of the first quarter cash budget is the opening cash balance. The first quarter budget, the balance is only 14,000, which is below the company required minimum closing cash, which is 330,000. So the company has to borrow. So notice the balance is larger and the amount is sufficient to pay the borrowings in the first quarter together with the interest charge. To keep the closing cash balance higher than 30,000 units. All right, that's it. Now, I would like you to try this one. So this is from 2021 July final exam paper. So Cliff Bar and Company, which produce organic foods and drink, is preparing cash budget for the first quarter of 2021. In order to prepare the cash budget, the financial officer of the business has collected the following information. So opening cash balance in January, food science monthly in salary, interest for investment, January, March, February, April, blah, 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 blah. Then you got this, and then you got trapped debtors as well. So what I want you to do for 10 marks, prepare the cash budget for the first quarter of 2021. So the first quarter means that what is the month I need from you?
January, February, March.
January, February, and March. Now, please take picture. I'm not so sure whether I have already give this example or not. Although I do think that I give July 2021. If not, take picture of this. You have 20 minutes to do it. Actually, 10 minutes only because it's 10 marks, but 10 minutes. So I'm going to meet you back here in 20 minutes time at 12:50. Okay? Have you taken your pictures? All right. 3, 2, 1. All right. Your 20 minutes starts now. Good luck, guys.